The Australian government has recently revised its tax brackets for the 2020 to 2021 financial year, which should see you taking home a little bit of extra cash after you pay tax each week or each fortnight or each month when you get paid. There are a few additional things that you should be aware of, so stick around because today I'm going to cover what's important. Welcome back to my channel. My name is Reese, and in today's video, I'm going over why your take-home pay might be a little bit higher than usual and what the new Australian tax brackets are. Australia's tax brackets have been revised as part of the government's plan to reduce tax paid by its citizens, and unofficially, but technically, also has been done to support people during these hard times, or the economy during what is known as the Big Sick, or COVID. These effects came into action in October. However, you will be back paid to the 1st of July, which is the start of the 2020 to 2021 financial year, which means you've probably been paying more tax than what you probably should have each time you're paid, which means come tax time, you will either see a reduction in the amount of tax that you owe for someone like myself, or you might see a boost to your actual tax return, basically putting more money in your pocket. Woohoo! Rock on. Due to me having an investment property, I generally owe tax come tax time, so having that amount that I have to pay the tax man in July being reduced, I'm celebrating, I'm big open arms, welcoming, come on tax breaks, come on in here. So it's a good thing for people. In general, most people will benefit from it. It might only be a small benefit, but regardless, it's welcome. There are still 5 tax brackets, and I have made a video on how the taxation system in Australia works, so check that out if you're unaware. But in this video, I'm just going to cover the 2 changes. So there are 2 brackets which have been affected, and I'm going to just cover those changes to help you understand a bit better how it works. So bracket 2's cap has increased from $37,000 to $45,000, which means when you earn between $18,201 and $45,000, you will pay 19 cents for every dollar over $18,200. And the cap on bracket 3 has also been increased, which means when you earn between $45,001 and $120,000, you will now pay $5,092, which is the 19 cents on the dollar between the previous bracket of $18,200 and $45,000, plus an additional 32.5 cents for every dollar you earn over $45,000. Now to the important component of this video, and I'm sure you will figure it out pretty quickly where I'm going with this. This will probably see you if you fall between these brackets, which I would say most Australians do who are working. I would say most do, under the $120,000 limit or threshold. You're probably now going to have a few thousand spare dollars in your pocket come tax time. In my opinion, this little boost is something that you could, potentially treat as an opportunity to get some discipline and habit building out of your tax return. My recommendation would be to treat it as if it was never there and purpose it for something that is actually going to benefit you in the long run. So just to be clear, I'm not saying about the money you're going to get back paid. I'm saying each week when you get paid, there should be a little bit more money. There should be a bigger chunk of money on that payslip that you could just kind of pretend never existed. So you could just set that aside for things like putting it towards your emergency fund. That would be my first suggestion. Let's say you're trying to get to a certain number for your emergency fund. I personally am trying to build mine to 10,000. With that little bit of extra money, I've decided to contribute a little bit more to my emergency fund. So I'm not spending it. I'm not treating it as spending money or anything. I'm literally just putting it into my emergency fund for the sake of building that up faster. And my life isn't changing at all because the more money going into my bank account, I don't need that money at the moment. So I'm utilizing it for a good cause. My second suggestion would be to put that little bit of extra money aside for investing. This could be a great way to build up a little bit of money because it will build quickly if it's a couple of $1,000s. And at the end of the year, let's just say at the end of the year, come tax time, you'll have a little pool of money which can be used to stick into the share market and buy some stock. Why is this a good thing? Because it's an easy way, if you've been living your life off your paycheck as is, to basically build up a little bit of a buffer for that intended purpose. And investing is something that can benefit you in the long run like massively. On top of this as well, it's a great little habit building exercise, because when your salary gets topped up at the end of the year, or you might get a bonus, you can treat it exactly the same. You can purpose that extra cash for something that will benefit you in the long run, that it's not something that you need to think about as part of your everyday earnings. These are I'd call them little wins, the things that definitely give you an opportunity to just start getting ahead and putting yourself in a really secure and safe financial position if you want to. I'm not telling you what to do, I'm just making suggestions, something that I have really benefited from doing and something that kind of brings me a little bit of joy. So it's food for thought. My last suggestion, which is definitely my least favorite of the 3 suggestions that I've given you to do with this extra buffer money, would be to just add it to your wage as per normal and break it up into chunks as you were doing already, I hope. And I've linked videos in the past about how I break up my wage and why I break it up in that format. And I encourage you to do something similar, because it definitely will benefit you in the long run. And if you were to follow this method, or a method like this, like a bucket system, definitely just treat it the same. Don't add it as extra spending money. It doesn't mean you can go buy a few more drinks on the weekend. Just treat it the same. Keep to your percentages, break up your wage evenly, and you will not regret it in the long run, because you are purposing your money. You're still having spending money, but you're purposing most of your money for a good cause. And the outcome of that is hopefully a better life, a better mental stability when it comes to your finances, and basically reduce stress overall. To get a quick breakdown and understanding of how these tax breaks or tax reforms may affect you and your pay, or your take-home pay, I highly encourage you to use the pay calculator. I have made a video on how to use it, which I've linked below. I have left a link to the actual website where the pay calculator can be found, which I encourage you to use as well. They are super useful resources, super simple to use, and overall, what you get out from using them is knowledge about how things like this are going to affect your take-home pay. They're very accurate, they're very good at what they do, and they give you some pretty good insight as to how and why your payslip might be changing. So I highly encourage you to check them out if you're unsure. Overall, I hope you enjoyed today's video. I hope that it was insightful, and I hope that I know it's very specific to Australia. Sorry for my viewers that are outside of Australia, but overall the point is I'm here to cover content and create resources, which is basically useful to anyone searching for it. So for the people that do watch it, I hope you got something out of it. If you enjoyed, please consider liking and subscribing. It really helps the channel. And as always, I will see you in the next one.